I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, February 2nd. Volatility is the name of the game. It was at the end of the year, was in the first month, and I don't think that that's going to be much different here in the second month of the year. But before we get into the markets and the charts that we're looking at, I want to touch on the Ag Alerts program that we were running last year. The group that was running our Ag Alerts program is officially registered as a CTA, and so it's kind of a managed account approach. If you'd like to learn more information about that, please give us a call, or you can email me directly, Oliver at bluelinefutures.com. I think it's certainly something worth exploring, a great way to diversify what you're doing in the markets, so you don't have to be staring at the screen all day, every day. You've got a team of professionals in your corner doing that for you. Without further ado, let's get into things. We've got a Chicago wheat chart pulled up here at the moment. And this is something that we've been talking about in our daily grain express over the last couple days, is this head and shoulders formation forming. You can see shoulder, head, shoulders. This is technically bearish so long as we stay below these levels. 670 is a line in the sand for us. We have a bearish bias right now. The only thing that would change that is a conviction closeout above this shoulder, which comes in near 670. As far as the downside potential goes, well, there's some support down here, 620 to 630. That's going to be the big barrier. One of the things that we're watching very closely going forward is the U.S. dollar. The U.S. dollar has a bit of an inverse head and shoulders, which would be bullish. If the dollar continues to firm up, we think that that could be a headwind for commodities, and more specifically, maybe a little bit more of a headwind for Chicago wheat. If this next support pocket gives way, that could also obviously induce a little bit more long liquidation and potentially take us a little bit further. But with that said, we all know how trading works. You got to take it one day at a time. So that's what we're looking at for the wheat market. We've got beans pulled up here. Really not a whole lot going on. We're still pretty darn close to the top end of the range or uncharted territory, but we are starting to consolidate here over the last week, and this could be potentially setting up for a bigger directional move. Now, will that be up or will that be down? To be determined. We're looking at some trendline resistance developing here, and we tested that today up near 1375. A breakout above there potentially spurs some new excitement and invites buyers back into the market. But we were watching Friday's lows really closely. Comes in near 1335. This was also the low end of the range from January 26th. If that gives way, we wouldn't be surprised to see that lead to a further acceleration towards that psychologically significant $13 handle, which was previous resistance, and recently here support at the end of January. That is going to be the inflection point if we get down there. Break and close below $13, I think, just changes the whole psychological aspect here in the very near term. Now, we know that the fundamentals still remain strong, so I would, kind of cautiously approach this. If you're looking to be a seller, if you're a producer, that's a little bit different. You got the physical product. But that's what we're looking at for beans. Potential setup for a bigger directional move, breakout or a breakdown. These are levels we're looking at here in the coming sessions. Now, wrapping things up with the livestock, I want to touch on live cattle and lean hogs. April live cattle has performed very well. We got that breakout move above 120. Got up here and are now just kind of lingering near this technical resistance that we saw back in February of 2020. There's also additional resistance up near 124.50, which is a contract high, something that we've been writing about for a while. We think we can eventually get there and potentially out above there. But again, one day at a time. We were kind of hoping to see a little bit more of a pullback because we were reducing against technical resistance with some clients. If we get a pullback and a retracement to this original breakout point, we're going to look to get that exposure back on and maybe build another stair step higher from the previous one. So that's what we're looking at for live cattle. And as I mentioned in previous tech talks, we remain upbeat on the deferreds as well going out to June and August, but are welcoming some healthy corrections here at this moment in time. I think we get a pullback, there's going to be value there. Now, wrapping things up with the April lean hogs, same type of setup that we were looking at in the U.S. dollar and wheat with the inverse head and shoulders. We talked about that last month, or maybe, darn near 2 months ago now. Time flies. We're breaking out, and we held this pocket here, which is what we talked about in this morning's livestock roundup. kind of defending this breakout point that we saw here on January 22nd. We're able to do that. Now we're continuing to the upside. Where is technical resistance? Well, if you've listened to our Tech Talks before or have read our livestock roundups, you know that in uncharted territory, it's very difficult to find meaningful technical resistance. We look at these charts as kind of a roadmap in our previous interaction between buyers and sellers, and we don't have a whole heck of a lot of that. So this is kind of on the coattails of momentum right now to see where we could potentially go to next. But if you're in the bull camp, you want to defend this area. Break and close below there would neutralize the bullish developments that we've seen here since the middle of November. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.